Well, after the steep sell-off that we saw on Friday, people are waking up this morning and saying, what now? We have Rob Morgan, Chief Investment Officer at Sethi Financial Group, joining us. Hi, Rob. Thanks for coming on the show again today.
Hey, Lauren. Good morning.
Okay, so things aren't looking as bad this morning, but, Rob, if you look at the banks, and I'm going to throw out some of these numbers for you right now, Royal Bank of Scotland opening down 12%. Barclays was down 18% on Friday, down another 10% today. Banco Santander down 20%. Morgan Stanley down 10%. Those were for Friday. How bad is this reaction for the banking sector?
Well, I think in general for risky assets, and banks are certainly considered right now one of those. The reaction has probably been a little bit overblown, you know, other areas, of course, other than banks that have been hit, emerging markets, oil, and I think it is a little overblown. I think a lot of U.S. investors are going to be saying today, is this a great time to be jumping into these assets? And I think I'd still be a little cautious. I think the watchword, at least for this week, is we're going to see some volatility. So I wouldn't be necessarily just jumping back in right now.
The volatility, I think you're right on the mark with that, Rob. I wanted to ask Tim, much of the same. We know the safe havens, gold, utilities, tobacco, those fared better on Friday and probably will continue to do so. But your thoughts on the very temperamental and very volatile banks, particularly the U.S. banks?
Well, they're probably going to outperform the European banks, but still the problem that the U.S. banks are going to have is that the yield curve is still very flat.
And it's not going anywhere.
No, it's not.
Because you're not going to get the Fed to raise rates anytime soon. And so that's not right, exactly.
And when you had a lot of buying go into the U.S. banks very early in the year and toward the end of last year, right after the initial Fed rate hike, that was basically a bet that the yield curve was going to steepen significantly. And really what happened was the long end of the curve continued to get pressure on it. Right. And it just flattened the curve. And that turned out to be a very bad trade by investors that are going to hesitate to get back in.
Rob, Barron's came out over the weekend, and they essentially said Goldman Sachs shares could rise some 30% over the next year. What do you make of that?
Well, I agree with Tim. I think you know, I was certainly overweight the banks earlier this year, and Goldman Sachs certainly, you know, cream of the crop there. But that was on the assumption that there would be a Fed rate hike campaign, the yield curve would steepen, and yes, I agree with all of you that the Fed's going to be not raising rates anytime soon. So I'm certainly neutral on the banks right now, and but Goldman Sachs is, even though I don't have a buy on that in particular, it's certainly one too we'll keep an eye on.
Tim, we talk about this volatility. We're speaking with Rob as well about this. Basically, everything has turned negative. The Dow, NASDAQ, the S&P, especially with Friday's move, everything is into negative territory for the year 2016. People who are looking at their 401ks and IRAs are now nervous, worried about going forward. What do you tell them? Well,
I don't think they're going to be, unless we have a very sharp sell-off this week, I don't think they're going to be too nervous, because let's just keep in perspective. The S&P 500 was almost at an all-time high on Thursday.
That's true. We were within, by the way, we were within 1% of S&P 500's all-time record closing high. So things are not that bad.
No,
you make a great point.
But it does reinforce that there is significant resistance at that 2130 level on the S&P 500. I believe that since it made its all-time high last May, it's closed above 2100 35 or 40 times, but still not made an all-time high. So it looks like one big broadening top on the S&P 500. The Russell is a very different story, significantly below where it was 12 months ago.
Okay, Tim, stay here. Rob Morgan, Chief Investment Officer at Sethi Financial Group, thank you very much.